Hey, thumbs up.
Please.
Hey, g'day, James Ramsey from Stone. How are you? Welcome to Morning Minutes. Who we got on? Phillips on, Dotton, Rita. Hey, we're live.
Good morning.
Action. Good morning, everyone. Welcome to Morning Minutes with myself, Michael Burgio, and Mark Novak, episode 215. Great news for landlords. Hey, Mark, tell us. What's the great news?
We are free falling with rents. Rents are going down.
Down.
Not for long.
Not for long, because it's just been reported the first drop in like 15 years, 3.2%.
For New South Wales.
Let me bring up that article in a sec. Let me just bring up why is that good?
In a quarter. Look, I think that, I think we've got to look at the overall pressure, why this has happened. And thank God we do know why, because you wouldn't want to be looking over your shoulder and not know why you're running.
Yep.
It's due to COVID. It's happened in a quarter. I think the next question is how low can you go? Are these rents going to go down anymore? Look, there's a benefit
as well.
There's a benefit there at the cost of landlords. There's a benefit there to the greater community where affordability. You've got some, I don't know what you've got, Telegram up on there?
Yep, just putting the article. Rental apartments suffer biggest price drop in more than 15 years as of COVID. Yeah, I think you're right there. Like, if we didn't know why there was a drop.
Can you get rid of all the Telegram stuff for us, please, champ? Just off that and just bring that article up.
Yeah,
that's what. And this.
Yep, got it.
Is it? No,
yeah, it takes a sync.
Oh, okay, cool. Yeah. So, I think the thing, guys and girls, to think about this is it's for the greater community. There's affordability. So when rents come down, it's more affordable for the greater community to rent properties. If they've got more change in their pocket, then they may well spend it somewhere else in the community. They may save it, whatever they may do, but it's good. It's at the cost of the landlord. But Michael, you and I were just talking about off air, landlord's net effect. How does that work out?
Yeah, just want to make sure it's correct now. Is it so? Basically, due to the downward pressure of the market at the moment, we have seen interest rates at an all-time low. And basically, probably a short period of time ago, about 12 months ago, Mark Cantwell, how are you, bud? Interest rates were, feels like a lifetime ago, but they were 4%. They were 5%. So so at 4% on a mortgage of 400,000, let's say you're paying 16,000 in interest. Now you can get loans of say let's just say 2% for this figure, or 2.5, which is about so I did the figures at 2%, 8,000 a year. So that's actually halved due to the market conditions and the external economy at the moment. So your payments. So what that's done, that's reduced, that $8,000 difference is $150 a week cheaper to hold a property compared to the decrease of $14 a week, which that article says 3.2% on $447 is about $14. So we got to take the good with the bad. One, it's a great time to move because things are cheaper, but it's not all doom and gloom where rents are falling, prices are falling. I believe we recorded a positive price growth in this quarter, but your rent's $150 cheaper based on a $400,000 mortgage, which is pretty substantial, $150 a week cheaper.
I think, that's what you worked out off air. So landlords, if landlords have got debt against the property. Now, the problem is if a landlord doesn't have debt against the property, like a retired landlord who owns the property, owns the asset entirely, there's no debt.
Yeah.
They really are copying it.
Yes.
Now, they are copying it, but you got to remember, Mr. and Mrs. Landlord, the only one component to you making money out of an investment property, and probably the component which is twice as big as the rental yield, is the capital growth. So you can't actually forget that capital growth, traditionally with property, if it's residential, 10% a year on average the last 10, 20, 30, 40, 50 years. 10% a year you're getting in capital growth, and 5% a year you're getting in rental yield. So where you're getting eroded at the moment a little bit on rental yield, you still achieved a little bit of capital growth even through COVID. Now, how does commercial work with your yield and your rent? It's still about 14, 15%, but it switches, doesn't it?
Yeah, it does. So with a lot of commercial property, your rental return is between 5 to 10%. There are a lot of great opportunities that can be closer to that 10%, especially if you're buying vacant. So I'm Polito. How are you, buddy? Mark Campbell said 90%.
Polito from Orange County, California.
Yeah. We're worldwide. Mark Campbell said 90% upside based on savings of cost versus decreasing, which is great, 100%. So, all right. So with commercial property, there is generally a lot less debt on the property, but you're getting probably let's just call it an 8% rental return, and then 5% based on that capital growth. And a lot of capital growth is actually triggered with the lease, because there's a 4% trigger in that rent. So if the lease goes up 4% a year on a yield, that goes up, say, 20,000 in growth. So a lot of it is coincided. But
that's a good point.
Yeah.
In commercial property, you're normally building 3 or 4% growth a year. So to be eroded, 5% of what we've seen lately, it actually helps out with commercial. But at the moment, commercial, all rental increases are being paused until the 1st of September. Mark Cantwell says the yield serves as a purpose to hold the property until we get the growth that gives meaningful equity. Spot on. So a lot of people are buying on the basis of that equity or that growth anyway. And he also says it's 90% upside based on the savings and cost versus decrease of rental income. Spot on.
The whole thing about this with commercial, Mark, and it goes with any property. The long-term winners in property. Okay, Paul Ferrari, thanks for tuning in. The real winners in property are the people who hold it for 10, 20, 30, 40, 50 years.
Yeah.
So in that lifetime, there's going to be good times and bad times.
Yeah.
So let's just face it. It's not all hunky-dory. Otherwise, you wouldn't have the half the population with a perception that property is bad. Like if they were all winners, then I don't know. We wouldn't have to list properties or just sell.
In the most beautiful things in the world, shit happens. Yep. Whether it's a beautiful forest that has a bushfire running through it, whether it's kids that get in a little bit of trouble, whether it's marriage and you need to work on it. That's life, hey.
Yeah, but the point of this is there's going to be ups and downs, and right now, especially in the commercial market, on rental yields, now's a bad time if you're a landlord. Let's not sugarcoat it. Yes, there are some good examples out there, but overall, just like the residential is down 3.2%, commercial is as well. But you got to think long term. And actually, some of them, my probably savviest commercial owners are looking to buy, because when things are bad, there's generally some good opportunities out there. So yes, your rental yield maybe you're supposed to be getting 8%. You may get half that, because we've just had probably our busiest month ever in commercial at Novak, doing nearly 20 lease deals when we're normally doing, say, 7 or 8. It's been huge. Yes, those rents are lower than either what the owner wanted or what it was previously getting. But the leases, they're not lifetime leases. They're 3 to 4 years, or 2 years.
Play the long game.
Play the long game. And we're seeing a lot of businesses out there. We've said it on another show. So I thought people were going to be contracting and finding smaller locations and all doom and gloom. But we're seeing new businesses come from the home garage or a sublease, taking their own premises. Really exciting. Coleroy, new yoga. Well, not new, because she's been in Coleroy for probably 5 years, but subleasing. Her business has been doing great. She now has the confidence, and she's just taken a head lease on Pittwater Road, 1091 Pittwater Road. Go check out if you like yoga. But that's a pure example. Through these bad times, people are prospering. And just like the 3.2% decrease in rent, okay, fine, you may be able to get another property cheaper for you that you would like. Lock it in for a year or two. But then on the other side, your mortgage is down. There's good and bad, but play the long game. It's the biggest advice.
And affordability, dude. Affordability is not a bad thing. You know, bringing affordability to the community. Yes, it's at the cost of our landlords, unfortunately. But there's incredible. I guess human nature has this incredible equalizer. It's like a natural instinct. It just happens, and that's what we're seeing a little bit now. It's that equalization that's coming out. Don't know how we're getting there. Don't know how we're coming out of it. But it is what it is. Yeah. But also, I know a big thing that we haven't spoken about is landlords have had the opportunity to pause their repayments.
Yep.
Now, I don't give a shit what world you come from. That's good news. Yeah. You know, like I don't. Oh yeah, but
that's signs of a friendly, good society, isn't it?
Like seriously,
don't kick a man while he's down. Basically,
and pass it on a little bit. You know, seriously, pass it on just a little bit, because at the end of the day, if Big Brother taps you on the shoulder and says, "I'm going to extend you out for 12 months or 6 months," or you don't have to pay anything, like that is awesome news.
Very good point just there. If your mortgage, how about this? Put this in perspective. Basically, any landlord that's refinanced and had a loan, say 4 years old, your repayments are halved. Your interest is halved. Have you halved your rent? No. Like, have you passed that on? Now's a great time to reinvest in your property, paint it, new carpet, do this. Like, your rent's probably could be lower than it was, so that's bad. Yeah. Your money's cheap, is cheaper than it's ever been. So maybe pull some money out of the equity, renovate your property, put some money back into it, and then you may get a higher rent. You get the tax deduction, you get all those nice things. So that's another thing as well.
And playing the long game, you know, like you didn't get into this property to live off half a breath. Do you know what I mean? You got in there for the long game, the long haul. Property has been wonderful to our landlords for many, like 5 years, 3 years, 20 years, 30 years. It's a long-term thing. So the rentals that are actually having a little bit of a hit at the moment, that's cool. You know what I mean? Like I know you've paused your mortgage payments if it's hurting. You're giving back to the rental market a little bit if you need to. Take the opportunity to do some works to the property. It's a community thing. It's almost better for the community a little bit.
Yeah. So take the good with the bad, play the long game. Anything else you want to add on this one, Mark? I'll put the link to the article in there.
It's Monday.
It's Monday. That's true. Very observant.
What's the weather like in Sydney?
It's good. It rained yesterday. It bucketed down where I was, but it's a beautiful blue sky, not a cloud in sight. So it's really good. What we got on? Nikki Parker, love having you on. Any questions you have or topics you want us to talk about? Andrew Cole, it's good to have you on as well.
Where's Mark? Did he say anything else?
No, Mark went quiet.
Fabulous. Cleaning, how are you, legend? Big shout out to everyone. Dot and cross it. G'day.
Rosie Sullivan,
g'day to everyone this morning. Rosie Sullivan, hello. Have a great week, everyone. Enjoy tonight. We've got love having to join us on Novak News, which is at 7:45. Real estate is good. I don't know what we got on.
We'll figure it out. We'll send an e-blast.
We'll do the traditional fashion. We'll do in the last couple of minutes.
Yep. Anyone's got topics, send it through and we'll talk about it. So thanks,
absolutely,
everyone.
Guys. Everyone, love you. Have a great week.
Cheers.
Thanks, Michael. Cheers, mate. Bye.